Hi, Amanda Kendall here. So today, let's talk about hobby loss rules and when do you have a hobby versus when you have a business? Because this is becoming a highly targeted audit area for the IRS as they're looking into these things and determining that a lot of business owners, specifically in industries that tend to have a lot of hobbies going on in them, are not actual businesses and therefore not able to claim business losses. So let's talk about the industries that are being targeted for this first. So network marketing is going to be a highly targeted area for this. Affiliate marketing going to be a highly targeted area for this. Crafts and little like scrapbooks, wreaths, those types of things are going to be highly targeted for this. So if you are in those types of industries, then you need to grab a pen and paper, pause me, and take some notes because you're going to want to know about what you need to be aware of to ensure that you don't trigger a hobby activity on your tax return that prevents you from being able to legitimately deduct a loss in your business. So let's take a look here. I'm going to jump over. I have some definitions and stuff pulled up here that I want to share with you. So a hobby loss is defined as it is the term associated with funds spent to pursue a recreational activity that is not recouped. These expenses, when paid in connection with this hobby, are deductible only to the extent of income earned by the hobby. So really simple explanation is a hobby is something you do for fun. Yes, you may make money on it, but the intent is not to have an actual business that is going to generate a livable income off of it. That is how a hobby loss is determined. Or, yes, that's how a hobby and its loss is determined. So, when you're looking at this from a business standpoint, if you are in an industry, especially a highly targeted industry, you need to sit down and have a real conversation with yourself, like da 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 da. Talk to yourself. It's okay. But in all seriousness, figure out what the intent is. Are you doing this just to make a little extra money on the side? Are you doing this to produce a full-blown business and generate a livable income out of it down the road? You need to figure this out because how you figure or the answer to that question is going to determine a lot in how you do this with your taxes. So, first thing I want to make sure you understand is if you have a hobby business, not a business business, but a hobby business, a business that you have no intent for profit, you're just doing it because it makes your heart happy and it makes you all warm and fuzzy and you want to do it, and you have no intent to generate a livable income off of it, then you have very different rules when it comes to claiming things on your taxes for that hobby income. If you have a legitimate business that you have the intent for profit and the intent to actually produce a livable income off of it, you fall under standard business rules and regulations over there when filing. So we're going to talk a lot about the hobby side and how you get classified there and how you avoid it. So when you have hobby income, you are most likely going to have expenses associated with it. So let's use a physical craft product because it's the easiest to explain this. So if you make wreaths for holidays, and this is something that you love doing, you're going to have costs associated with this. You're going to have the cost of the wreath frame. You're going to have the cost of the floral and the bows and the ribbons and whatever else you put on these. You're going to have those costs. Now, if your business is deemed as a hobby, you can deduct those expenses up to the point of your income, but you cannot deduct expenses past the income to generate a loss for hobby. So you can zero out the income, but you cannot take a loss to offset any other income that you're earning. That is the biggest difference with a hobby here. So the IRS actually has 9 points. There are 9 factors that they are looking at when they are looking to determine if a business is a hobby or if a business is a business. So I want to run through those 9 with you so that you're aware of what those are. The first one is whether or not you carry on the activity in a business-like manner and you maintain complete and accurate books and records. So for those of you that are running a business and you're not maintaining books, you're not keeping a accurate spreadsheet of your income and expenses, you're not tracking things, you're not using QuickBooks, you don't have to use an accounting software, but you do have to maintain some sort of accurate books and records. If you're not doing that, That's one mark against you on being deemed as a hobby. So it's really important, if you have the intent for profit, that you are maintaining accurate books and records. The second point that the IRS is going to look at is whether the time and effort you put into the activity indicate that you intend to make it profitable. So if you're spending 1 or 2 hours a month making wreaths or doing whatever it is you do that is your passion that you're putting out there, 1 to 2 hours a month is typically not going to generate profitable income. Can it? Yes, it absolutely can. But they're going to look at the time and effort that you're putting into this to see, does this person actually have an intent to make a profit here? So if this is your side hustle and you're working 5 to 10 hours a week, yeah, you can be profitable with 5 to 10 hours a week. There's no doubt about that. But if you're only putting in 1 to 2 hours a month, you're going to fall a little bit more on that hobby side of the line. So you just want to be aware of how much time you're actually putting in as an effort to make a profit. Number 3 on the bullet list of 9 that the IRS is going to look at is whether you depend on income from the activity for your livelihood. So again, this is where I started out and I said that you have to prove that you're trying to generate a livable income. So, if you're generating a couple $100 a month, no, that may not, but it may be necessary for you to make ends meet in your household. If you start to generate a couple $1,000s a month, now you're leading more towards that. Okay, this is actually something that I am relying on to support our family. So if you can identify, regardless of what that number is, if you can identify that the income and the revenue generated from this is actually benefiting your family financially, as far as paying necessary living expenses, you're going to qualify under this one. If not, don't worry, it's only 1 out of 9. We all have to start at 0 and grow from there. So just because you're not quite there doesn't mean the IRS is going to automatically deem you a hobby, but just be aware that this is one of the 9 items they're looking at. Number 4 is whether your losses are due to circumstances beyond your control or are normal in the startup phase of your type of business. So, I'm going to stick with the wreath example as we're talking here because it's just really easy to explain and grasp for everybody. So if you make wreaths in your business and you generate $7,000 of losses, but those losses are literally just you stocking up on supplies or over delivering on product just to get a sale, that's not necessarily going to be necessary or beyond your control. So you want to monitor your expenses when you're starting out. You don't want to have significant losses unless you can prove that it's a normal startup process for your industry, or you can prove that it was beyond your control. Beyond your control would be anything that is outside of your circumstances. So let's say that you have all your supplies in your basement and your house floods and everything's ruined and you have to replace it all. Circumstance beyond your control. Your house catches on fire. Circumstance beyond your control. Hobby Lobby or Michael's is having a really, really great sale and you just couldn't pass it up. Not a circumstance beyond your control. So just be aware of that one. So number 5 is whether you change your methods of operation in an attempt to improve profitability. So if you have been doing this for a year or two and you've consistently had a loss in those couple of years, then what are you shifting in how you're running your business to ensure that you can be profitable? Are you changing your pricing? Are you changing your vendors to be able to have lower costs so that you can maintain your pricing? You have to change something in your daily operations of delivery to show the IRS that you are making adjustments to try and ensure that you can have a profit there. So make sure that if you have not been profitable in the past, that you're making these shifts and that you're documenting what you're doing here. So let's see. Number 6 is whether you or your advisors, aka your tax professional, have the knowledge needed to carry on the activity as a successful business. So your tax professional, your financial advisor, maybe your business coach, like whoever these professional advisors are that you have in your corner when it comes to getting your business up and running, do they have the knowledge and the experience to help you carry this on as a successful business activity that's producing a profit? So if you're hiring a business coach who's never made a profit in their business and they're really not quite sure how to advise you to do that, probably not an experienced advisor that's going to help you win on this point. If you hire a tax professional who works out of their basement and they use TurboTax Online to file your taxes and they're not actually signing it as a tax professional, probably not an experienced advisor that you are going to win this point with. So number 7 is whether you were successful in making a profit in similar activities in the past. So this is where I'm going to really target some network marketers and affiliate marketers on this point, because sometimes what we see in this industry is you've made a really great income with this company over here, but something shifted and you moved to this company over here. And so now you may have a loss in the first month, year, whatever that looks like over here while you're building back up. So if you have a history of being successful in your industry and you've just made a shift to be with a different company or promote a different product, whatever that looks like for you, but you have a history of having profitability in this industry, that's going to be a good point on your side. Number 8 is whether the activity makes a profit in some years and how much of a profit it makes. So they're going to look. Hobby loss rules fall under a category of 3 out of 5. So what do I mean when I say that? You have to be able to show that out of 5 years, you've had 3 profitable years, and maybe those 2 lost years were just a fluke. Maybe they were startup years. Maybe you had a situation like COVID happen, and that unforeseen circumstance beyond your control, but produced a loss in that year. So looking at that 3 out of 5 is whether the activity makes a profit in some years and how much of a profit it makes. Now, in saying this, if you generate a profit of $10 and the next year you have a loss of 10,000 and the next year you have a profit of 500 and the next year you have a loss of 4,000, that's not going to work. You need to have significant profits to offset significant losses. It's just a fact of business, unfortunately. We are not in business to generate losses. We are in business to generate income and profits. So you have to show that intent to be classified as an actual business and not as a hobby and fall under these hobby loss rules. And point number 9 that the IRS is going to look at if they are trying to determine if you are a hobby or a business is whether you can expect to make a future profit from the appreciation of the assets used in the activity. So if you make wreaths and you have all this fancy dancy equipment that you use, I've made a couple wreaths. I don't use equipment. I don't even know if that's real, but that's the example we're going to use here. So if you have equipment that you use that you would eventually be able to sell and the asset's going to appreciate and you're going to be able to use that, this becomes one of the factors the IRS is looking at. Now, here is the big catch on point number 9. Assets typically, with the exception of real estate or stocks, do not appreciate. They depreciate. So think about this. You buy a car. As soon as you drive it off the lot, it's worth less than what you paid for it. You buy a piece of equipment. As soon as you load it in your trailer and you haul it home, it's worth less than it was sitting on the stock floor. So just be aware that typically assets depreciate. They do not appreciate. And so this one's going to be really hard, but it is point number 9. So again, looking at that, you have these 9 points from the IRS that they're going to look at to determine if you're a hobby. You have the 3 out of 5 year classification that you need to look at. But here's the bottom line. If you are doing something and you're dabbling in it and you're having fun and you're not sure if it's going to be a legitimate business, then maybe you need to have a conversation about whether this is a hobby or a business. And if it is a business, then you need to talk to your tax professional. You need to really nail down a plan. Okay, what do I need these numbers to look like over the next 1, 2, 3 years to not have the IRS come back and classify me as a hobby? Because here's the reason you don't want that. If the IRS classifies you as a hobby, you can no longer take that business and actually write off your losses. So you want to make sure that you don't get classified as a hobby. And the best way to do that is to talk to your tax professional and lay out a game plan. If you know you're going to be generating a loss this year and it's year 1 or 2 in business, then you absolutely need to put a plan in place and see what shifts you need to make to generate some profitability in it next year. So on that note, I'm going to leave you with that because that was a lot of information. If you have any questions, please feel free to reach out and ask those. You can reach us at elevatingprofits.com. You can also reach us by phone to schedule an appointment at 303-847-0836. So if you have any questions, please do reach out. But in the meantime, really just make sure that you're actually taking a look at your business and making sure that you're not going to fall under those hobby loss rules, because it's not a fun thing when the IRS comes back and says, oh, by the way, I'm sorry, those $3,000 of expenses that you used to offset the rest of your income are no longer a loss. And now, you know, $3,000 isn't much, but it could be anywhere from $300 to $600 in taxes. So you just want to avoid that when you can. So hopefully this helped. If you have any questions, drop it in the comments below and we'll make sure to reach back out and answer those for you.